All right. Good afternoon, everybody. We are live and we are getting everything prepared for today's stream. So just give me a moment. Let's get some tags on here for some stuff. Done. How do I add that though? We are getting prepared for the earnings call for Dutch Bros. Appreciate everybody hanging out with me today. Let me just send out a few of these things out to everybody so that way we can get everybody up and running. The stock is already going berserk, about 12% up. Let's just share the screen so you guys have something to look at while I'm fooling around with stuff. So let's move that over to here. And you guys are able to see that all going up and to the right. And I can do this so it expands a little bit. So yeah, just want to get the stream out to everybody before we kick off and actually run self. But so far, looks like it's pretty good. I haven't actually seen the numbers. Pretty upset. I honestly thought that we would have an opportunity to buy more at some point. And haven't had the opportunity to do so. So in that respect, this has been tough to be able to add more. And eventually, I want to see a pullback. I thought that we might be getting a slight pullback over the past few months, just with the fact that the stock has kind of gone from the 70s, 60s, and now back into the 50s. And then, of course, we're reversing course back up to 65. I guess that's not a bad thing overall. And let me just get on StockTwits as well. Make a post. Bros. And so appreciate everybody being here. I know that there's a lot of other competing earnings calls going on right now. I know that Tanner's doing AppLovin. I know Amit's going through and checking out a bunch of different ones. If anybody's interested and they have yet to do so, check me out on Twitch. I'm actually getting very close to monetization over there. And if you have the opportunity and you have a free Prime sub, please, it would mean a lot to me if you guys signed up and used your Prime sub. It's completely free for you, but it means the world for me. And let's just hop into some of these numbers. I can't believe, actually, that we're at $65. That's pretty impressive. Okay, so let's get into the numbers themselves. 2Q 2025 Dutch Bros earnings achieves 28% year-over-year revenue growth. That's not surprising. 6.1% system-wide and 7.8% company-operated store same sales growth. That's insanity. I think that they're trying to aim like over the trailing 12 months or like 3 to 4%. So the fact on a company-operated basis, they're getting almost 8% same-store sales growth is insane. Coupling that with, of course, the price increases, it's notable. That is a notable movement in the underlying. So let's just do a quick read here. Dutch Bros is one of the quickest and fastest growing brands in the United States quick service beverage industry. Today, reported financial for the second quarter ended June 30th, 2025. Christine Barone, Chief Executive Officer, President of Dutch Bros, stated, "Our business continues to fire on all cylinders, guided by focused strategy, strong execution, and our amazing people." Barone continued that the momentum in our business remains strong, and our second quarter results were outstanding across multiple fronts. We delivered revenue growth of 28%, System same store growth of 6.1%, and then company operated same shop sales growth of 7.8%. Our transaction driving initiatives are working in unison with same shop sales growth primarily driven by transaction growth of 3.7. So 3.7% more people coming through. And then marking yet another consecutive quarter of transaction growth, and our confidence in the year's trajectory continues to grow, reinforced by strong performance and stuff that they've seen so far through July. They've strengthened the conviction in their full year performance and raising full year guidance for total revenues, same shop sales growth, and adjusted EBITDA. So let's get into it. So opened up 31 new shops, 30 of which were company operated in 13 different states. It's awesome to see. Total revenues up to 415 million as compared to 329. Wow, that's a pretty big jump. Okay, from the same period of 2024. So from 325 to 416. System same shop sales, 6.1% growth, 3.7% transaction growth. Company operated was 7.8. And then, total compared to 5.9% last year. So it was 5.9% growth last year. Now 7.8% for company operated stores. It's movement in the right direction. But at some point, that's just like, that's insanity. Like, you think about it, they're already at over 1,000 stores, and you have 7.8% more shop sales, right? And overall, 3.7% more people coming through. Like, that's just insane. Insane. So the revenue for company operated shops, which is the majority of the revenue that comes from the company, increased to about 29%, 380 million compared to 295 million last year. And then company operated gross profits was 92 million compared to 70 million. So let's see, 120 BPS of pre-opening costs was 24.3%, up 60 basis points. So gross margin increasing. Good. Operated shop contribution margin 30% to 118 million across as compared to 91 million. And so that continues to go up and to the right. So I'm curious to see what the slide pack shows about that. And this is something that I'm really focusing on here. So adjusted SG&A expenses, sales and general administrative costs were 58.7 million, 14.1% of revenue compared to 14.6, right? The thing that you want to notice is the percentage of revenue, right? The hope is that you continue to drive that down and it doesn't expand. As you're expanding revenue, the hope is that your underlying overhead costs continues to go down. And so that's steadily have gone down. And I hope they have a slide. I think they have a really good slide in the previous things. So hopefully they are looking good. So adjusted EBITDA grew 36.6% to 89 million for the quarter. It's pretty impressive compared to 65 million, and adjusted net income of 45. So this means 20 cents EPS. So almost 80 cents of on an annualized basis. Now I think that summer, so this quarter and next, the second and third quarter, I think are always kind of the larger growth quarters. And then it kind of, I don't want to say subsides, but it's not surprising if from the third quarter to the fourth quarter to the first quarter, sales kind of flatten out quarter over quarter. But generally speaking, from the fourth to the first to the second, you always kind of have a quarter over quarter revenue growth. Now, of course, year over year, there's always an underlying kind of growth, but there is some cyclicality in the business. So this 12 to 20 is probably, the 20 might be from an EPS perspective, the best we see for the year, but I wouldn't be surprised if the latter half ends up doing well. If you adjust for diluted common stock, it was 26 cents versus 19. So that's pretty good. So I'm curious. Let me just pull up the previous. If you guys give me a moment, let me pull up the previous guidance so that I'm not being completely opaque. It's been a minute, so apologies that It's been a second, and I don't have everything in front of me. Supplemental earnings slide, PDF. Here we go. Where is it? Outlook. Okay. So the outlook for the year, from what they provided at the end of the 1Q earnings call, is 1.555 to 1.575 billion. So that is now going up about 20 or so million. So to 1.59 to 1.6 billion. And then they had same stores. Yeah, exactly. Same store sales growth of 2 to 4%. So I was right with that. So now they're expecting it to be approximately 4.5%. So on the upper end of that, and actually expanding that upper end range. The upper end range was previously 4%. Now they're saying, expecting it to just be 4%. They're not providing a range, whereas before in the first quarter, they were providing 2 to 4%. And adjusted EBITDA at the 1Q call was between 265 and 275, which is huge, right? We're getting to the point now where you think about it, they're spending a crap ton of capex to build out all these stores. They need this EBITDA, which is the cash that's actually coming into the business, and they're putting out that money, right? And the hope is at what point are they actually going to start to hit a pivot point where they're breaking even and actually adding cash to the balance sheet? This is important. I want to get back to this later on. So they were predicting 265 to 275. They've upped that range $20 million on the bottom line to 285, and by 15 million on the top end of the range by 290. So 285 to 290, which is up from the 265 to 275. That being stated, they're going to keep the capex unchanged. So they did predict in the 1Q 2025 240 to 260. They're going to keep that at 240 to 260. And the new shops are still 160. So that remains unchanged, as they've noted in this graphic here. This is important. This is really important. $285 million is supposed to be coming in to the business. Let me just make sure that you guys hear me okay. And that where we go. Where's my StreamYard? I lost my StreamYard. Where's my StreamYard? There it is. $285 million is coming into the business on the bottom line. $80 million this quarter, $89 million this quarter. Like I said, this is probably going to be one of the better quarters in the year. I wouldn't be surprised if EBITDA drops in the fourth quarter. And it was not 89 million in the first quarter. So overall, looking good in that respect. The thing that's important to look at, so they're starting to bank this 285 in the actual cash register. The capital expenditure is 240 million. So at this point, they're actually going to be hitting a point where they're adding cash back to the balance sheet. Why is this important? Now, they can continue to open over 160 stores a year while actually adding cash to the balance sheet. Now, that is pivotal. That's extremely pivotal. We haven't been in the situation in 2024, right? And we kind of saw an inkling of that in 4Q. We saw an inkling of that in 1Q. That's why the stock went on a huge run. So if you guys remember, let me pull it up. If you guys remember, the stock was kind of wavering. Anybody that's been here for a while has kind of been like, you know what? It's been kind of a rough go at it. People were kind of being like, why is Matt investing in this weird coffee company? It doesn't make sense. They're going to get overtaken by Cosmic, which was the McDonald's brand, etc. And here we are, right? The stock is expanding relatively well. And I think in the third quarter, when they reported earnings, they actually showed that they were actually being able to add cash to the balance sheet. Not everything was going out in terms of capex. So now they're going to be able to actually grow that. So apologies, I'm not answering any questions right now. I'm literally just diving into the numbers. So apologies if you're saying hi, and I'm not intentionally ignoring anybody. I saw some beautiful faces in there, the people that I love, but I'm just in the moment. I'm trying to get after these numbers really quickly so that you guys are not. I know you have there's a lot of competition for other streams that you guys can go to. And I just want to make sure you get the numbers and you don't get bored. Because by all means, you can go to wherever you want to. So what does this mean? So let's go to the actual presentation and go through what it actually looks like from a presentation perspective. I think that site crashed. So let me see, dutchbros.com. That did not crash. Yes, investor relations, quarterly results. We will get rid of that because that is crashed at this point. I'm hoping that this is what's sharing now. And it was, let's just see. The actual earnings presentation. There we go. Download PDF and share. Okay. I always love how they always show this, the store. It always fires me up. Okay. Zoom out a little bit. Okay. So this is a good one. Okay, let me get situated here. All my monitors in the right way. Let's go through. So a lot of this, I'm going to repeat some stuff, but I think there's some color in here that's really important. And it shows the magnitude of how fast this company is actually growing. And I also want to pull up locations. Where are these things actually located across the U.S.? And so in that respect, you can see specifically, what's actually happening. And where they're growing and how much additional. And I'm curious to see how the competition happens as they go to the Northeast, as they face Dunkin' Donuts. They've faced Starbucks with tremendous resilience here in Texas. I can tell you there's Dutch Bros all over here. In Houston, I've gone to them 5 years ago. They were very sparse when I moved back into the country when I was living in Trinidad, moved back to the country. And there was only like one or two here in Houston, and now they're literally all over the place. And they pinwheel it. They literally go in the outskirts of town. It's pretty interesting. Anyway, so stores last year, 912 overall. They increased 131 stores in general to 1,043. So now over 1,000 stores. If you think about this, over 1,000 stores, and the general AUV, annualized unit volume per store, is around 2 million. So to give you guys some thought, if you guys are forecasting out to the future, because I know you guys like that, just multiply, and you have to think that's company operated stores. So you have to take the company operated stores, 725, right? Not the 1,000 stores, unfortunately. But let's just say you get to the point where you have 4,000 total company operated stores. Sorry, they're doing yard maintenance outside. 4,000 company operated stores at 2 million, 2.2 million, 2.5 million. Let's just say 2 million to make it easy. You're talking about $8 billion in revenue, 30%, hopefully potentially more at that point, ops margin, low SG&A. Hopefully by that point, it's like 2 or 3% SG&A costs. Hopefully there's not a lot of overhead associated with it. You're going to be talking about a crap ton of profit, a couple $1 billion worth. And so you put a multiple on that. It's not going to be surprising that this company is going to be worth north of $25 billion at some point. And this is before likely international expansion, which I think Mexico, I think there's a huge opportunity there. I believe there's an opportunity in Canada as well. And so anyway, going into the actual revenue growth, 325 to 416, we talked about this. This one is interesting. I want to highlight this. 65 million adjusted EBITDA to 89 million. So 89 million is a pretty good number because this is actually what cash register, what's coming in to the cash register. This 46 million is adjusted with after, depreciation, etc. You have to think they have a lot of real estate. So there's a business now where they're basically building the real estate, 160 stores where they're building out real estate that now they can depreciate. So there's this large tail of like depreciation costs that's built in of just having real estate costs, right? And so there's a model, which I'm not exactly sure which model they're going with now, but it's like you either work with a company to build out these stores and then lease it back to you, or you just build it yourself. And, in that respect, I think they're trying to balance. and figure out what's the most appropriate way and cost-effective way in the long term. And I think what they actually have done is they said it's probably better, and I could be wrong on this, it could be better to actually build your own stores and then find somebody to buy it from you, so that way you don't have to like worry about somebody like building something and then leasing it to you. And because I think that just adds an additional third party that causes problems. But anyway, gross margin, look at this. Company operated shop margin. This is huge, 31%. This is big year over year, and it's staying and it's consistently, it's not like expanding massively. And I don't expect this to get to 50% or anything like that. But if they can get this to 35%, if you're talking every dollar that's spent is, a third of that's gross profit, right? And then if you think about it, all you have to worry about then is the company overhead, and the rest of it just comes to EBITDA. Like it's a pretty simple business model. It's not complex. So, I mean, you're just selling drinks here, and everyone has smiles on their face. So it's a really good opportunity. So this is the same store shop growth. So 6.1 system wide, 7.8 company operated. So that's not news to anybody. Once again, this is, kind of the breakdown, right? And like I stated, like you have this depreciation cost. It's kind of inevitable, regardless of whatever you have, because you have all this real estate that you're putting money into. So look, you're getting 380 million in terms of revenue, company operated stores, right? You have the beverage costs, you have actual people that you have to pay, occupancy, so this is like leasing, etc. Opening costs, depreciation, amortization. So you get the gross profit, and then you can write in what the actual depreciation, amortization is back, because this is a non-cash item. This is specifically to help, lower your tax cost basis. And then you add that back in because it's a non-tax event. You can add that back into, or not non-cash event. You can add that back in because this 25 million is not actually being spent. It's just, a tax break. And you get to 31%. That's huge. That is huge. And like I said, then you have the overhead of the people out in Arizona that are running kind of the executive team, etc. Curious what drink that is. Anyway, so they're upping shit. They're upping the revenue growth to 1.59, 1.6. The same sort of sales growth being 4.5%. It's pretty impressive. So let's just see what other items they have. It looks like it's pretty light in terms of what they have compared to the normal stuff, but they have the normal stuff in here. So nothing crazy in here, but this is what I'm talking about when I talk about how in the third quarter of last year things started to get pretty good. So you can see adjusted EBITDA was kind of growing 23 to 48 to 50, and then they kind of come down in the fourth quarter as they always do. But then you see this like spike up, right? 50, 65. So you see this like, growth. And so you see the EBITDA margin also on a company-wide basis continuing to go up and to the right as well, do really, really well. And then I want to show somewhere where they show anyway, but before I get to that, the capex has continued to be around this 250 range for quite some time, for the past several years. And so when you look at the full year 2024, you ended up probably around that 250ish, so kind of break even. But that third quarter where you had 63 million, once again, the third quarter is always elevated. You still have the back end of summer in there. And so generally speaking, people are out and about driving around. They want some drinks, they want to get out in the sun, hang out. And so the weather's great. Everybody's happy. Everybody's smiling. They want to get some Dutch Bros. And so the elevated quarter that you have here allowed them to kind of say, hey, we outpaced the actual capex spend. And that was where you see this large spike up, that we saw when we ran all the way up to 80. People are like, oh my God, this company can actually make money and add money to the balance sheet. So there's that piece. There's the adjusted EBITDA piece and why the company's actually performing as expected. So I want to show somewhere, I believe they've had it in previous. I'm not sure if they have it in this. And maybe it's okay, here it is. This is something I'm always keeping track of, and this is something that's very important. So I told you, right? The business model is simple. You have the stores, you have the cost of labor, you have the cost of the goods, you have the cost of the rent if you're leasing it out, etc., and opening costs, building costs, etc. Understood. Very simple business model in that respect. Very difficult because there's a lot of different interactions, transactions, etc. But in simplicity, simple business, not very complex. Then after you get that gross profit, all you have to do is remove the sales and general administrative. Sales and general administrative has kind of been running at this 50 odd million ish, and has slowly increased as the company increases. Obviously, you're going to have larger sales and general administrative, but the hope is that you drive this as close to zero as possible, because this is what's going to be driving your overall what's the word I'm looking for? Net income growth and things of the like, right? You have this gross profit of 30 odd percent, 31% actually this quarter. And so if you just have this less drag, you're going to end up being great. So if you're able to increase revenues and lower this amount, you're golden, right? If you're able to continue to focus on this piece. So as we've seen, it's gone from 23%, in the first quarter of 2023, to all the way to 15%. 15.7%. And last year it was 18% at this time. This year it's just under 16%. So continue to make it, as the revenues get bigger for the entirety of the company, it means that SG&A isn't scaling at the same pace, right? SG&A is hopefully, it is expanding, right? You're going from 45 million, 55 million-ish or so to 60 to 70 million. But in terms of overall growth, you're going from $200 million in sales to 250 million in sales for 2023 to now probably 355 to 450 by the end of the year in total sales. So doubling, if not, doubling and then some total sales, but only increasing your SG&A by say 50%. That's positive, right? That's a positive thing. So that's pretty much it. I mean, in terms of the company itself, I'm very curious if there was anything else that I know the thing that I'm kind of curious about for the earnings call specifically is, hey, what are they going to do? Is the food coming? Because I think that they noted in the first quarter, for you guys that haven't, I don't know when's the last time I made a video specific around Dutch Bros, but oops, didn't mean to do that. If I go to the fireside chat here and share this with you guys, they went through a lot of detail, and actually maybe it's probably prudent for me to actually go and share and go into more detail about this. But the big highlight was throughout 2025, they're trialing new food items, and so within here, they talk a good bit about, maybe it wasn't this one, but within the few slides recently, they've shared, maybe it wasn't this one. Maybe it was these events. That's the second quarter earnings, growth stock conference presentation. Share this. No. I thought that they had shared, maybe it was in the first quarter. Oh, maybe it was in the investor day. Let me see. So if it was in the investor day, I feel like I definitely have shared it. How they're doing the food aspect of things. And sometimes I've literally just gone to the store. Sorry, am I sharing this? I just want to make sure. Yeah, I'm sharing this. Sometimes I've literally just gone to the shop and said, can I just get a can of Rebel? You can get Rebel free, and they have the cool dude on it. I love it. Anyway, it's going through different renditions of everything. But okay. So yeah, this is where they're talking about, building the brand beyond, right? And getting to a place where they're actually starting to sell, kind of like how Starbucks does as well. But I feel like in here as well, they started sharing the new food items somewhere. Maybe they didn't. But basically, the thought process is they want to. Here we go. So for you guys that have been here, they currently have 4 different things. So they have different types of muffin tops. They're chocolate chip muffin top. If you guys haven't had it, it's insane. So, I don't get it for a reason because it's delicious. Lemon poppy seed is very good. I don't remember if I've had the orange cranberry. I think I've had it for experiment reasons, but I always go back to the lemon poppy seed or the chocolate chip. But it's been a couple months because I could literally eat one every day. They're absolutely amazing. But anyway, it looks like they're expanding to 8 total things. So like a chorizo wrap, which I'm excited to see, a slider for like a little sausage, egg, and cheese. I'm excited. It's only 206 calories. I'm trying to watch my figure. I've heard everyone, complain about my weight for the past 8 years on YouTube. So I'm actually starting to, keep track of some of this stuff, and hopefully it's a little bit noticeable. I'm trying to get more fit for you guys. So in that respect, hey, 206 calories. Maybe every once in a while, instead of eating a protein bar, I'll go to lunch and grab a sausage, egg, and cheese slider. Slice of banana bread, coffee crumb cake. So to me, I think these are going to be simple, right? I don't think it's going to hold up the line. It's not like you're cooking stuff from scratch. Like I think a lot of these are going to be made off site and then shipped. So it'll be interesting comparatively to what they had in the past. I'm upset to see the granola bar go. I mean, if you guys know and have had the granola bar, it's one of the best granola bars I've ever had. Maybe they're not making the margin on it. I don't know. But the granola bar has been one of my favorite items they have. I mean, sometimes I'm like, hey, let me get the granola bar instead of the chocolate chip muffin top. But either way, both are great opportunities. One thing that I want to look at before we get to the earnings call is overview. Do they have total locations? Dutch Bros locations. Location finder. So they're getting close, my guys. They're getting close. They're starting to open these Dutch Bros on the border here. And that's what I'm saying, man. You look at it, we're getting close, right? I mean, you've always had Oregon, right? You've always had Oregon and Washington. And, but you think about it, like you're getting kind of close to Vancouver at this point, at what point do you just, book it over? And so, South Carolina is getting its first. I know that they just opened their first one in Georgia based off of social media. Alabama. Wow, they are growing like a weed in Florida, my guys. So a couple quarters ago, they really only had 5 stores in the works, and now it looks like they have over 2 dozen. It's like almost over a dozen for sure, going on 2 dozen. A single store here outside of Charleston. I'll have to tell my buddy because he's in Charleston. I always forget how far. So I come from Philadelphia. You guys probably know that. The outskirts of Philadelphia, probably like this area. And now I live here in Houston. You can see me hanging out. Hopefully you guys don't geo-track my house now. But based off this map, I'm sure you can get really precise. So anyway, I'm always just kind of like amazed because sometimes they do a flight to Charleston and then to Philadelphia every time I fly home. But you're really starting to see this expand, right? And one thing I want to hear more about, which I haven't heard about, and it was supposed to occur in 2024, I believe, the second half of 24, is in Dallas. They were actually opening up a roastery. And my thought process was, if you open up a roastery, then it kind of opens up the Eastern Seaboard, because previously the other roastery was all the way up in Oregon. And so going all the way from Oregon across country, tough logistically, right? But if you have 2 roasteries, makes it a lot simpler to be able to distribute product. And so my hope is like we would hear a little bit more about how the roastery in Dallas would actually helping from a logistics standpoint increase margins or something like that. And I haven't heard anything, and I'm kind of curious if maybe I've missed it. But in the past, they talked about the roastery. Anyway, so Colorado is opening, New Mexico, all this. I have had it in Las Vegas. The first time I had it actually was in Eastern Tennessee when I was in the Smokies with my sister, probably like 2 years ago, I guess, at this point. And so that's what kind of got me to invest in the company. And so since then, it's been very fruitful. But overall, that's pretty much it. So let's go over to the chat, see how everybody's doing. Curious if everybody is an investor. What if they're not? They're not. Hope everyone's doing well. We got John, Adam. We got Juan, Gerardo. Sorry, I'm like about to hiccup or something. We got Miss Melanie. Juan, let's actually check on the stock itself, actually. So we're up at 66 $. Believe it or not, ladies and gentlemen. Sorry, that's up over the past 14%. 14% over the last 15, 20 minutes. Phenomenal. Absolutely phenomenal. So we got Miss Melanie, we got Heinrich, we got Miss Katie. Hello, Miss Katie. We got Greener, we got Jackie, Pudgy Ramen. Let's see. Yeah, Bros to 90. Hey, buddy, I need to message you back. I'm not ignoring you, I promise. I need to message you back. We got Derpy Rock. Duolingo, I did see that. That's awesome. Up over 20%. And after hours. So congrats to Joseph Carlson. I had a bunch of people actually, when Joseph Carlson noted that it was down so much, I had no idea. One of the stocks I've been keeping in touch with is Coupang. And I'm not sure if that one's down as much, actually, now that I'm curious while I'm thinking about it. No, it's actually up. Anyway, I was telling Mr. Patel around like the early 1Q timeframe, like $22, $23 that we should buy. So anyway, it's still going. Still going, ladies and gentlemen. Let's see if we can get to the 70s today. What do you think? I'm upset. I actually was kind of upset. I was hoping for some reason, they were like, oh, revenue growth is only 28%, not 30%. Let's sell it off. I wanted to buy more, I don't have a lot. I think it's just like 1,000 shares in the company. And so I would love to have bought a little bit more, it is what it is. I'm long in the company. The growth is real. I know, man. You can see it literally happening in your city. If you're in like Houston or some of those areas that I just pulled up, like Dallas, etc., the infill is absolutely insane. If you guys are paying attention, it's monumental in terms of how many stores they've been bringing up. It's really insane. Quick shout out to Twitch if you guys do watch. Trying to grow that as well, and it's been growing kind of well. Earlier we had over 8 people just hanging out, and yesterday or 2 days ago when I was talking, did the rocket launch, they had over like 15 people watching the rocket launch. So it was awesome. Not sure if it was you guys or a combination of you guys and many others. So always fun to see. And the goal is to just help more people learn about the stock market, get exposure to these great companies. Think about it. Like you yourself, may not have ever heard of Dutch Bros. Then I started talking about it, gave you exposure. You might not have invested based off of what I was thinking. You might have done your own research, and hopefully you did, and came across it and said, hey, so the hope is, and same thing with Rocket Lab, right? You might not have ever heard the company. I didn't hear about the company until somebody word of mouthed it to me. My goal is to hope and help, give exposure to great companies. And Rocket Lab was one of those great companies, I thought. And my buddy Cole told me about it back in 2021. I invested and I continued to investigate it. And, it turned out, talked about it a good bit. And a lot of people did their own research. They said, this is a great universal, not universal, generational type company. And, think about it. Why wouldn't I want to expand that onto other platforms? Why wouldn't I want to help try to get other people involved and give that exposure to these great companies, right? So if you think about it, some people have been complaining like, oh, I can't believe it's like, no, I'm going to co-stream on all these platforms. But the hope is the more the people know about these companies, the more they can buy these companies, the more the less liquidity you have, the more liquidity you have in these companies, the less available shares, eventually the less available shares, hopefully the stock prices go up, supply and demand, right? Look what happened to Palantir, right? The hype around Palantir and everybody hoarding shares over the past year or two. And now it's really paid off, right? Institutions are having to buy in after all these retail people. And hopefully that's the case of what's going to happen here with Dutch Bros. You have these people underlyingly wanting to buy something like Dutch Bros. They see the long-term potential of being a $20-odd billion stock, whereas right now the stock is, where are we talking? The stock is currently $9.5 billion. You're talking about something doubling from here, potentially tripling from here, going to 30 billion. I see it potentially happening. So anyway, let's see. Hate their coffee, love their stock. Yeah, I mean, it's not for everybody, man. If you really love milk, like if you're a huge latte person, or if you love energy drinks or lemonades or teas, great. If you love like a deep coffee taste, like a burnt coffee, bold, like really deep, bold coffee, it's not going to be for you. You're probably going to like Starbucks more. So it really just depends on your palate, and I encourage everybody to try it. And, there's not going to be one size fits all, right? That's why there's so many different companies out there. But I see a lot of people loving their lattes and the fancy coffees. And so if you want a fancy, nice coffee, I love their 911. But like I said, the 911 is like 4 or 5 espresso shots, and it gets you fired up. And I love their zero sugar Rebel. It's like that gets me going. But unfortunately, I'm like trying to watch the Fig, as you guys know. And so with that, cutting out excess calories, so I switched to the Americano. Americano is not bad. It's really not. So can't complain with that. Stand for the bros, ice water, thank you. Too early in the morning for you. Need coffee. Dutch Bros in Japan. Exactly, man. Dutch Bros in Japan, I feel like would sell off the shelves. Would sell off the shelves. Took my advice. I don't advise anybody. I'm just here, talking. So by no means did any of this sort of advice, but took your advice, did some real deep research, and staying dedicated to one position, buying up Red Cat, ticker RCAT, utilizing Palantir's AI. The defense sector is on fire. Congratulations. Hope that works out well for you. Adam bought $10,000 10 minutes before close and sold at 12%. Congratulations. I've done no research on Bros, but I trust Matteo. I mean, I didn't say that the stock was going to run, by 12%. So that was a gamble on your part, and luckily it worked out for you. But sometimes those gambles go in the opposite direction. So always be cautious. Matt is definitely amazing as an analyst on stocks. One of the few people I watch. I appreciate that, my friend. I try to get a little bit more into the numbers and try to give people some thoughts as to why I think things are going the way they are. Now, of course, numbers aren't always why the stock price goes up, but I think sometimes in the end they correlate. There you go. Yeah, exactly. Thank you so much. I try to grab little bits of knowledge. Appreciate that. That really means a lot. That's literally why I'm doing this. Literally the only reason why. I didn't have the opportunity. I had to teach a lot of this stuff to myself in 2012, 2013, 2014, when I was just getting started out of school. And, I had economics classes and stuff as an engineer going through college, and, it just didn't click. And so, I had to teach a lot of myself this, burning my head against the balance sheets and income statements, trying to understand it. What's this? What's that? And, I didn't have somebody to walk it through with me. And so hopefully any way that I can help anybody get up that learning curve, it's really, really helpful for me. Or not really helpful for me, hopefully helpful for you. And hopefully for me, it just makes me feel good. Any way, shape, or form that you can get there is great. 31%, right? Like the contribution margin, 31% is huge for like a business like that. I don't think restaurants get that type of margin, generally. So where are we at? We're back to where we were about a month ago. We have seen a big pullback. And then 3 months ago, we were up in the 70s, but earlier in the full year 2024 earnings, it's jumped up to 85. And yeah, I think this is around when they started introducing like the idea of a new food and stuff like that. So hey man, I don't think it's worth 85 right now. 66 is, an okay price. I don't know if I'd be running to buy the shares. I was really hoping it would come back down, but I mean, if you think about it, adjusted EBITDA is probably going to be close to what was it? It was 80 something million. So in that respect, it's going to be 300 million a year. They talked about 275 to 290, I believe. So let's just do some quick maths. If you guys don't mind me taking up some of your time. So let's just call it $10 billion, and then divide that by, let's just say, the 0.3. Sorry, not 0.3. 10 billion divided by the 300 million. It's really not that expensive, guys. It's really not. And you're expanding quickly, right? If you think about this, like, think about this wholly with me. $9.5 billion company. It's rounded to 10. So 10,000, right? Because let's just do things in millions here instead of billions. Or keep it in billions. 10 billion divided by 0.3 billion, because that's what the EBITDA is. The price to EBITDA is just over 30. And it will grow next year, right? Like, next year's EBITDA growth will probably be, easily $60 million. And so you're talking about easily close to 350. So in that respect, that's 10 billion divided by the 350. That gets you to the high 20s, you know? Anyway, it's really not that expensive. It's really not. Especially when you have the same store sales growth and the revenue growth and the company stores growth. It's interesting. Seeing too much stuff on social media for bros to miss. I ought to bought calls and didn't. I mean, I'm not a huge proponent on buying long calls or gambling on earnings, but I guess to each their own. Just not enough capital to be a part of it. I know, man. It's the thing. You got to pick and choose what stocks you're a part of. You got to pick and choose. I knew they'd push the Florida hard. Bro CEO went to high school in Tampa. That's true. She did talk about that. She talked about that in previous earnings. Oh, wow. Like that. Within 6 minutes, we're about to be after it. Up 114%. I don't know. I was close to 100%, if not over 100% before earnings today. So, and at one point I was over like 150%. But to me, just writing the covered calls, collecting that income, you know. Far out of the money, though. Don't want to lose the shares. Expanding to the Midwest, exactly. I mean, very curious to see when they get to the Northeast and Midwest. Maddie is Leonardo DiCaprio doppelganger, looking good. I appreciate that, but far from. Leo is a very sexy man, and I'm far from that. Jack Love, you know how when we were younger, we all going to talk about nowadays the kids hang out at Dutch Bros and drink their hot chalk. Interesting. I did not know that, but it makes sense. A lot of social media, a lot of TikToks. The TikToks, they're huge. I don't know much about them, but yeah, the TikToks. Anyway, Miss Katie, what's going on? Never had it before. Next time you're traveling, you will give it a go. Love that. Love that picture of you, by the way. Very cute picture. Will the Tesla bots drink Bros coffee? Hopefully, because that'll keep the income coming. Yeah, bro. Found you in 2018. You were focused on dividends. Been a follower and listener since. I appreciate that, man. Long-time followers. I love that. Grinding to retire definitely rings a bell for sure. I've definitely seen you in the chat many a times. Lionel, keeping those bros till $25 billion markup. That'll probably move those stocks into JEPQ to cruise with the div. Love that. Reinvesting in the JEPQ for a snowball. I don't think that's a bad move, man. Like, I could see this company get to 25, and you know, you never know. And right now things seem to be on fire. Christine had a lot of experience. She's worked closely with the founder, and so she's taken a lot of that culture and made sure that she harbors that. And it seems like things are going well. I have seen some underlying like disgruntlement, you know, of people pushing for margin and stuff like that, and just some slight employee dissatisfaction. But overall, it seems like they're pretty happy. Every time I show up, they're all smiling, giggling. Much more so than when I go to Starbucks. Sometimes I like a little macchiato. You know, can't lie to you guys. But overall, yeah, it seems like everyone's pretty happy. But for a coffee company, it gets tough. You know, it's tough. And the thing that I'm curious about, and you know, by now I'm going to turn it over to the earnings call here in a couple moments here, but their goal is 2,029 stores by 2029. So between now and 2029, they'll have to open up close to 1,000 stores. And so you're talking about right now 160 stores opening in fiscal year 25. they're going to have to grow that. So they're going to have this, I anticipate, as the EBITDA grows, the capex will also grow to be able to expand the store count. And so is that good? To me, it might be okay to choke back a little bit. I get it. 2029 by 2029 sounds great. I'm okay with choking back a little bit. But at the same time, you're a $9.5 billion company or so. You only have like a 300 million or so loan. Like the debt of this company actually isn't too crazy. So we will see. Been a customer for over a decade before IPO. The coffee is good. The culture is exactly what people crave. Yeah, it's not. Some people get too surprised by it. It's like, oh my God, somebody's actually being nice to me instead of rude. Holy shit. Like I'm surprised I haven't figured out that people spit in my coffee at Starbucks. I know it happens, but like sometimes I go to Starbucks and I'm like, Jesus, why do I even come here? It's like they don't even want to be there. Like I get it, like it's work. Nobody wants to be there, but like, are you that miserable? Sorry, I don't like want to be like a Debbie Downer, but sometimes I've gone to Starbucks and I've just been like, these people do not want to be here. They don't. Excited, man. Great company. Christine, when I first started investing in the company, I heard Christine transitioning. I was like, this is going to go one of two ways. And I will just say, I have been pleasantly surprised. And I was, looked at her history previously at Starbucks, helped lead that growth at Starbucks, and has done a lot of other things across multiple different companies as well. And so to me, I had high hopes that she would continue that range of success, and she's been continuing. So let me just give a quick login here. Oh, already logged in. Perfect. And so let me share. Give me the thumbs up if you guys can hear the music. One's in the chat if you can hear the music. Yeah, the Chick-fil-A coffee, that's a really good way to explain it, right? And the thing that I love is that they're company operated, so they control the culture, they control the narrative. You can hear it good. And so I think that like I was talking to my mom about this yesterday. I was like, Mom, like the thing these days. Oh, here we go. I was like, Mom, the thing these days is company operated stores.
And welcome to
so
the
you can
Dutch
control
Bros
the culture.
Quarter 2025 earnings conference call and webcast. This conference call and webcast is being recorded today, August 6th, 2025 at 5 p.m. Eastern Time, and will be available for replay shortly after it has concluded. Following the company's presentation, we will open up the lines for questions, and instructions to queue up will be provided at that time. I would now like to turn the call over to Patty Warren, Dutch Bros Senior Director, Investor Relations and Capital Markets. Please go ahead.
Good afternoon and welcome. I'm joined by Christine Barone, CEO and President, and Josh Gunzer, CFO. We issued our earnings press release for the quarter ended June 30th, 2025 after the market closed today. The earnings press release, along with a supplemental information deck, have been posted to our investor relations website. Please be aware that all statements in our prepared remarks and in response to your questions, other than those of historical fact, are forward-looking statements and are subject to risks, uncertainties, and assumptions that may cause our actual results to differ materially. They are qualified by the cautionary statements in our earnings press release and the risk factors in our latest SEC filings, including our most recent annual report on Form 10-K and our quarterly report on Form 10-Q. We assume no obligation to update any forward-looking statements. We will also reference non-GAAP financial measures on today's call. As a reminder, non-GAAP measures are neither substitutes for nor superior to measures that are prepared under GAAP. Please review the reconciliation of non-GAAP measures to comparable GAAP results in our earnings press release. With that, I'd now like to turn the call over to Christine.
Thank you, Patty, and good afternoon, everyone. Dutch Bros continues to fire on all cylinders, guided by a focused strategy, strong execution, and our amazing people. Our second quarter performance underscored our continued momentum and reaffirmed the strength of our brand. We are encouraged by our significant multi-year runway and the opportunities we have to deliver sustained results and continue scaling this company with our tenured and passionate team. In Q2, once again, we delivered on our mission to be a fun-loving, mind-blowing company that makes a massive difference one cup at a time. Our business momentum remains strong, and our second quarter results were outstanding across multiple fronts. We delivered revenue growth of 28%, system same-shop sales growth of 6.1%, and company-operated same-shop sales growth of 7.8%. Our transaction-driving initiatives are working, as system comp was primarily driven by transaction growth of 3.7%, marking yet another consecutive quarter of transaction growth. This growth was fueled by a coordinated effort of our long-term, multi-year transaction drivers. Our new shop opening cadence is on track, and we remain confident in our ability to open at least 160 system shops in 2025. New shop productivity is at elevated levels, and in Q2, we opened 31 new shops and entered Indiana, our 19th state. Our confidence in this year's trajectory continues to grow, reinforced by the strong performance we have seen so far this year. It is very clear that our efforts are working in unison to propel us forward. These efforts translated into strong financial results in the second quarter. System-wide AUVs were $2.05 million in the quarter, in line with record levels. Revenue grew at 28%, with exceptional flow-through generating an impressive 37% adjusted EBITDA growth for the quarter. Based on these outstanding results across the board, I am very pleased to announce that we are raising our full-year guidance for total revenues, same-shop sales growth, and adjusted EBITDA. Josh will share additional details in a few minutes. Let's begin today's business update by spotlighting our greatest force multiplier, our exceptional people. Since 1992, we have been trailblazing a category-defining people-first culture within the drive-thru beverage industry. When combined with our relentless focus on speed, quality, and service, our people-first culture is not only our differentiator, but it is our most powerful competitive advantage. Every senior leader in our business has passed their flow checks, and every new broista begins their journey grounded in our culture before learning to handcraft beverages. This approach ensures our leaders are fully immersed in the heart of our business, building empathy, strengthening connection to the field, and enabling more informed, people-first strategic decisions. Our commitment to culture is also reflected internally with ongoing field surveys. We consistently score high on overall job satisfaction and our values of radiate kindness, get up early, stay up late, and change the world. When we recently expanded into Indiana, our opening mob team was on the ground, delivering a track record of consistency and service to jumpstart the Dutch Bros brand in the state. This approach ensures every new market, every new shop, and every new future in the field reflects the culture that has defined us for over 30 years. Our current operator pipeline includes over 450 candidates, with an impressive average tenure of over 7 years, each one ready to carry forward and scale the Dutch Bros culture. This homegrown pipeline, built over time with intention, ensures a consistent high bar across markets that is difficult to replicate. Our operator pipeline is central to scaling our shops and, more importantly, to scaling the Dutch Bros culture consistently. These individuals are deeply aligned with our values and bring a strong foundation of experience, positioning us for long-term, people-driven growth. Shifting to development, we opened 31 system shops in the second quarter and are energized by the accelerating momentum into the back half of the year to open at least 160 shops in 2025. Thanks to the robust tools, streamlined processes, and exceptional talent we've invested in thus far, we are well positioned to achieve our goal of 2,029 shops in 2029. If there's one takeaway from today's call, it is this: Dutch Bros is in growth mode, and we are just getting started. With a long-term addressable market of 7,000 shops nationwide and just north of 1,000 shops today, the runway ahead is expansive. We continue to broaden our real estate capabilities by making key hires who will execute on our long-term pipeline. With refined systems and a disciplined market planning approach in place, we continue to scale our presence nationally and accelerate an ambitious growth strategy. New shop productivity remained at elevated levels in Q2, driven by our refined approach to market planning. With new locations opening in the right areas, in the right sequence, customers are lining up from day one. These strategic investments in planning, tools, and processes have improved system-wide AUVs and new shop productivity, positioning us for long-term success. Now let me share how we're expanding our competitive advantages through a focused set of clear and well-defined transaction-driving initiatives. We are delivering transaction growth through a three-part plan, which includes an enhanced focus on category-wide innovation, an increase in paid advertising efforts designed to build brand awareness, and an emphasis on the Dutch Rewards program for one-to-one customer connection. We saw steady progress across each of these initiatives during the quarter, with clear signs that our efforts are working, evidenced by a sequential improvement in transaction growth. We are only beginning to unlock our full potential, with significant runway ahead. Here is an update on each. First, innovation. Innovation has been a cornerstone of our brand for over 3 decades, and it will continue to play a pivotal role going forward. This quarter, we responded to strong customer demand by bringing back lavender, and we introduced dulce de leche using ingredients from our existing pantry. We also introduced sour berry and matcha, showcasing how we simultaneously innovate across our menu categories. These launches reinforce our commitment to delivering bold, exciting flavors that resonate with our customers. In May, we elevated the customer experience with a thoughtful touch, returning the friendship bracelets from 2024 that highlight our engaging customer-first approach in a fun way. Then in June, we kept the excitement going with the Dutch koozie, bringing something fresh, relevant, and most importantly, fun for our customers. Second, paid advertising. During the quarter, we continued to step up execution of our paid advertising strategy, and the results have been clear. As we highlighted during our Investor Day, the strong performance of newer vintages has been driven in part by our laser focus on paid media and brand awareness. We are proud to share that based on recent survey data, both our aided and unaided awareness have shown significant improvement when compared to last year. We are seeing clear momentum, and we're energized by the positive trajectory. This progress reflects the strength of our brand and the impact of our continued efforts. Looking ahead, we see a clear and compelling runway to further close the awareness gap in new and existing markets, both in relative and absolute terms, unlocking even greater potential for our brand. As we scale and maintain a higher elevated paid advertising stance, the benefits of our awareness-driving initiatives are clear to us. Additionally, we believe the planned launch of our CPG line in 2026 can provide a meaningful tailwind to brand awareness, providing an expansive runway for our brand to grow. And finally, Dutch Rewards. In Q2, approximately 72% of system transactions were attributed to our loyalty program, representing a 5-point expansion versus the same period last year. We are just starting to tap into the full potential of this data to enhance our segmentation strategies. Recently, we have become more precise in the way in which we tailor communication to specific customer cohorts based on their rewards behaviors. This streamlined approach helps us build stronger, more personalized relationships across each customer segment. In addition to these foundational transaction-driving initiatives, We see a clear path forward with our strategic growth drivers: order ahead, throughput, and food. We remain enthusiastic about order ahead as we believe it is contributing to our transaction growth. As of the end of the second quarter, order ahead accounted for approximately 11.5% of transaction mix. In select new markets, we are seeing transaction mix more than double the overall average. Order ahead awareness has been driven primarily by customer exposure to the program through shop signage and our mobile app. This deliberate, steady approach remains our focus as we continue to prioritize driving the business forward while ensuring that our Broistas are set up to deliver fantastic service. We are seeing our strategy come to fruition as order ahead gains momentum in the morning daypart. We are focused on eliminating structural barriers, driving better throughput outcomes, and opening up the underutilized walk-up window channel. These results reinforce our confidence in our multi-year journey. We remain focused on increasing transaction potential at our shops by increasing speed and capacity through a series of throughput-based initiatives. Transaction growth continues to be healthy in Q2, and our shops are intentionally designed to support high volumes, aiding our throughput efforts. This enables us to meet rising demand while consistently delivering an exceptional customer experience. Recently, we introduced enhanced dashboards, which provide shop management greater visibility into speed-based KPIs. We know that when our field clearly understands and easily sees measurable goals, they take meaningful action to improve throughput. We are also continuing to refine our labor deployment model, ensuring that staffing better matches demand expectations during the day. While it is still early innings, these initial low-hanging fruit wins represent a strong start to what we recognize to be a multi-year journey to unlock transaction growth. We remain excited about the progress of our food pilot and look forward to continuing to test and refine throughout 2025. Early results suggest that an expanded food offering is driving incremental growth in the morning daypart, much like our order ahead initiative. During the quarter, we expanded the pilot to 64 company-operated shops, extending beyond Arizona into select markets in Kansas, Missouri, and Oklahoma. The initial results from our pilot test are exceeding expectations and reinforcing the potential of this initiative to drive AUVs. We are seeing encouraging signs of both ticket and transaction lift within the test group. Early performance in new markets has been especially strong, adding to our confidence to continue testing, ensuring we scale thoughtfully over time. We are pleased with customer and Broista survey data as well, particularly around feedback from customers on quality and likelihood to recommend, and are encouraged by early results indicating our ability to maintain high throughput levels. We're well positioned to expand this test in 2025 and pursue a broader system rollout throughout 2026. This expansion will enable Dutch Bros to capture additional white space in the morning daypart, which is a routinized, high-value occasion with strong growth potential. In closing, momentum in our business is strong, and we remain confident in the multi-year growth runway ahead. We have the most passionate people who are deeply engaged in the business. Our Broistas energize every interaction with the customer, fueling momentum across our brand, and our operator pipeline is ready to grow with us. We have clear visibility on our growth drivers. In Q2, we achieved 28% year-over-year revenue growth and 6.1% system same-shop sales growth, reflecting the strength of our business. We are clearly resonating with our customers, as demonstrated by healthy transaction growth. With over 30 years of brand love behind us, we continue to open shops with lines that stretch well beyond our drive-thrus, underscoring the strength of our strong demand. We are operating at the intersection of a powerful set of secular trends which are shaping our industry. From the rising demand for cold beverages energy drinks, and enhanced customization, we are exceptionally well positioned to continue the pursuit of our strategic vision. Our new shop productivity remains elevated, and we're excited about the cadence of openings throughout the remainder of the year. To be over 1,000 shops in with the amazing love we see for our brand gives me so much optimism in our future, our team, and the strength of this amazing company. I'll now turn it over to Josh, who will discuss our financial performance and updates on guidance.
Thanks, Christine. I'll provide a recap of our second quarter results, along with an updated outlook for 2025. Our Q2 performance built on the strong momentum from Q1 and clearly demonstrated that our transaction-driving initiatives are continuing to work. These efforts, along with the maturation of our new vintages, fueled our transaction growth and reinforced the confidence we have in the long-term growth potential of our business. Second quarter revenue was $416 million, an increase of 28% or $91 million over the second quarter of last year. System same-shop sales growth was 6.1%, driven by 3.7% transaction growth. We are very proud of the transaction outperformance delivered this quarter. It is a clear testament to the strength of our transaction-driving initiatives, which are working in unison to propel the business forward and serve as the primary driver of comp performance. I want to take a moment to recognize our field and marketing teams. Their execution allowed us to outperform our Q2 expectations. We continue to see strong traffic trends through July. With Q3 off to a great start, we are raising our full-year same-shop sales growth guidance to approximately 4.5%. For the third quarter, this contemplates 3.5 to 4% system same-shop sales growth, which includes approximately 60 basis points of net price roll-off, the impact of the July 4th day of week shift, and continued underlying transaction growth with a more normalized benefit from marketing activity in the third quarter. During the quarter, we opened 31 new shops, of which 30 were company-operated, bringing total system shop count to 1,043 shops. We are confident in our ability to accelerate our pace throughout the back half of the year, with approximately 40 openings expected in Q3 and approximately 60 in Q4, positioning us to open at least 160 system shops in 2025. In the quarter, adjusted EBITDA was $89 million, an increase of 37% or $24 million over the second quarter of last year. Moving to our company-operated shops, revenue in Q2 was $381 million, an increase of 29% or $85 million over the second quarter of last year. Company-operated same-shop sales growth was outstanding at 7.8%, with 5.9% coming from transaction growth. Company-operated shop contribution was $118 million, an increase of 30% or $27 million year over year. Company-operated shop contribution margin was 31.1%. Beverage, food, and packaging costs were 25.3% of company-operated shop revenue. The 20 basis points of year-over-year favorability reflects beneficial dairy pricing, which more than offsets increases in coffee costs. We expect these dairy savings to continue through the remainder of the year. Coffee costs were roughly in line with expectations for the quarter. With that said, we do expect to see the impact from coffee to accelerate in the back half of the year. As a reminder, we are substantially price locked on coffee for the remainder of 2025. Tariffs remain an area we are actively monitoring, and at this point, coffee accounts for 10% of our total COGS basket, with approximately 50% of our coffee sourced from Brazil. With all this in mind, our full-year outlook assumes beverage, food, and packaging costs of approximately 26% of company-operated shop revenue in the back half of the year. This reflects the higher impact of tariffs mitigated by savings we achieved on dairy costs. Labor costs were 26.6% of company-operated shop revenue, which is 60 basis points favorable year over year, primarily driven by sales leverage. Our full year guidance continues to contemplate labor as a percentage of company operated revenue remaining flat year over year for 2025. Occupancy and other costs were 15.8% of company operated shop revenue, which is 80 basis points unfavorable year over year, driven largely from the impact of occupancy rates from new shops. Pre-opening expenses were 1.2% of company operated shop revenue, which is 30 basis points favorable year over year. Given the accelerated shop opening cadence in the back half, we expect pre-opening expenses to be higher than the first half of 2025. Considering all of this, our full year guidance contemplates a company operated shop contribution margin of approximately 28.5% for Q3. Adjusted SG&A was $58.7 million, or 14.1% of total revenue. We continue to expect approximately 90 basis points of leverage on adjusted SG&A for the full year 2025. In Q2, we announced that we are transitioning the majority of the remaining headquarters staff to Arizona. We expect to incur up to $8.5 million in non-recurring costs, which we anticipate will be excluded from our adjusted SG&A. In the quarter, interest expense net was approximately flat year over year at $7 million. For the quarter, we delivered 26 cents of adjusted EPS, up from 19 cents, or 37% from Q2 of last year. Now I'll provide an update on our balance sheet, cash flow, and liquidity. In May, we successfully refinanced our credit facility, securing $650 million in total capacity. This includes a $500 million revolving credit facility, of which $50 million was drawn at close, and a drawn term loan facility of $150 million. The refinancing extends the duration of our available liquidity and provides more flexibility to support our long-term growth. As of June 30th, we have approximately $694 million in total liquidity, consisting of $254 million in cash and $440 million in our undrawn revolver. During the quarter, we increased our net cash position by approximately $19 million, which was driven by strong cash flow from operations. With a solid cash position on our balance sheet and enhanced liquidity through our recently refinanced credit facility, we are well positioned to pursue our growth with great confidence. In Q2, our average capex per shop declined approximately 15% from Q1 levels to approximately $1.4 million, demonstrating the progress we continue to make in transitioning our portfolio to more capital-efficient build-to-suit lease arrangements. Turning over to guidance, in light of our recent strong business performance, we are raising our full year guidance for total revenues, system same-shop sales growth, and adjusted EBITDA. Total revenues are now projected to be between $1.59 billion and $1.6 billion. System same-shop sales growth is now expected to be approximately 4.5%. Adjusted EBITDA is now estimated to be between $285 million and $290 million. There are no changes to our guidance for total system shop openings and capital expenditures. We continue to expect to open at least 160 new shops, representing 16% system shop growth. Capital expenditures remain within our estimated range of $240 to $260 million, primarily made up of new shop construction costs. We are excited by our business momentum and maintain strong visibility into our multi-year growth runway. We are very well positioned to continue delivering incredible results, backed by a robust four-wall shop economic model and exceptional unit-level returns. Thank you, everyone. We will now take your questions. Operator, please open the lines.
Brilliant call
Thank
so
you.
far on
We
my
will
part.
now be conducting a question and answer session. If you would like to ask a question, please press star one on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star two to remove yourself from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. In the interest of time, please limit to one question. First question comes from Andy Barish with Jefferies. Please go ahead.
Yeah, hey guys. Just wondering on the CPG strategy for next year, is that kind of going to roll out in newer markets or any, just any color on how you expect that to to go forward in 2026 to support, growing brand awareness?
Building to suite, meaning the real
Great.
estate
Thanks for the
strategy.
question, Andy. So as we look at the CPG rollout, we're focused on
Oh,
areas
consumer
where we
process
have
goods,
shops.
sorry.
So we want to introduce our customers to the brand through the shops first, and we'll be rolling out CPG in the markets where we have shops. And as we look at how that rollout will go, it's a little bit aligned depending on where the resets are by each retailer. But we would expect to start seeing some early rollout in Q1 of 26 with kind of a more substantial rollout through the rest of the year. We're really excited by what we're hearing so far. I think the excitement in this market for having a new brand with a lot of energy behind it is something that we're really, it's being reflected in those conversations that we're having with retailers.
Great. Thank you.
Thank you.
Next question, Sharon Zackfia with William Blair. Please go ahead.
Hi, thanks for taking the question, and congratulations to you and the team on really good results again this quarter. I know you're doing a lot of work on speed and throughput, and I'm sure that's manifesting some in these results we're seeing. And I know you mentioned labor deployment and ongoing initiatives there. Can you kind of give us an update on where you are on speed and throughput, maybe some metrics and what you're finding to be the best levers to pull to improve that further? Thank you.
Yeah, so I would describe where we are on throughput is we are still working on some basic blocking and tackling, and I think we have a long runway ahead of us from a throughput perspective. One of the things we're really encouraged by is if you look at those results in Q2, led by that 3.7% transaction growth, that is really everything working in concert. And one of the most important areas is really that labor deployment. So some of what we're seeing there as we roll out a new LTO, just having great training, making sure our teams are really well staffed against demand. As we do special merch drops and sticker drops, those are focused on different parts of the day. So our team's ability to really understand where we're going to see those demands, match our staffing against it so that we can really provide exceptional service is one of the things I'm most excited about that I'm seeing from a throughput perspective. We've also rolled out speed dashboards, and this is one of our first times that our teams get to see in a very easy way, how am I doing right now? How did I do on my best weekend or my best hour? And can I motivate and drive the team to see if we can deliver one extra smile during that time period? So those are the primary things we're doing right now. And I think it's really neat to see just how well the team is doing with labor deployment and ensuring that we're staffed really well to meet those high peaks, especially during some of those merch drops.
Thank you.
Brian Harbour with Morgan Stanley. Please go ahead.
Yeah, thanks. Hey, guys. Yeah, obviously, as you mentioned, new store productivity remains very good. You talk, about, I guess, some of the market specifics that you're seeing there, and is it still your expectation that that holds up quite well into the second half of this year?
Yeah, so as we look at new shop productivity, it does remain elevated, and we're actually seeing really nice, strong results across our different markets. We actually, our strongest performing shop last week was a very new shop in Georgia. And so really just neat to see that these long lines are holding as we move across the country. I think the strength of this brand is just really evident as we open new shops and get to see this amazing demand, even in markets very far from our home market of Grants Pass.
Next question, Christine Cho with Goldman Sachs.
Yes, thank you. Congrats on a great quarter. You've really led innovation in protein coffee and customized energy drinks, but it seems like some of your competitors are trying to catch up. Could you help us understand how you prioritize investments and allocate resources across your beverage and food platforms, kind of to maintain that competitive advantage? And what framework guides your decisions when identifying some of the new white space opportunities? Thank you.
Yeah, so as we look at innovation, it's really this cool mix of art and science. I think it is understanding what is going on more broadly in the market, where there might be an idea that could work with our customers. Then we do a series of testing where we bring in a customer panel and we'll have them try different things. We'll also do name testing, concept testing, so we bring some science in to see how we're doing. And then as things start to make it through that process, we'll even do some market testing just to really understand what is the best way in as we look at innovation. I think the other thing that we're really focused on is our customers are drinking across platforms. And I think that the growth in the beverage market is really being driven across various different platforms. So for us, we're really simultaneously trying to understand, what is going on in the coffee market with like the introduction of protein, or what are we going to do next on the protein side? We're also looking at customized energy. What is the way to ensure that our customers really understand the breadth of the offering there? What are some drinks that we can highlight to really drive that? And then we'll also have innovation in some of our sparkling beverages, our fizzes, and we can pop that throughout the quarter in different ways, both through LTOs and through bringing in secret menu items or showcasing a part of the menu over the weekend.
Next question, Logan Reich with RBC Capital Markets. Please go ahead.
Hey, good afternoon. Thanks for taking the question. Congrats on the solid print. I just had a question on the mobile order mix. Looks like it was up 50 basis points this quarter versus about 300 last quarter. I know there's going to be some sort of tapering off on the ramp, but just longer term, where do you see that mix getting to? I don't know if you have like an internal target or expectation, but just trying to get a sense of the ramp over the next several quarters on the mobile order mix.
Yeah, we feel really good about where mobile order is, and I think especially with how our teams are embracing it and how our customers are embracing mobile order. So the 11.5% is really where we would expect it to be. I think if you look across our system, we do have some of our newer markets that are double that mix. And part of the overall mix that we look at is really driven by just kind of the historical setup of some of our shops. As a reminder, we've been around for over 30 years, and a lot of our original shops are double drive-throughs. And so kind of that speed of mobile order and being able to go to the walk-up window, just isn't quite as the same thing as in some of our newer markets where we've got that walk-up window channel. One of the things we have seen, and it was something that we were trying to do, is that walk-up window channel now represents approximately 15% of the mix. When we started out on the mobile order journey, it was about 10%. And so really being able to balance that demand between those two windows is working incredibly well for us.
Next question, Andrew Charles with TD Cowen. Please go ahead.
Great, thank you. Christine, thanks for sharing the details of the expanded food test and the positive learnings you're seeing so far from the pilot. I'm curious, with all the positive details, what's driving the decision to roll this out throughout 2026 rather than all at once?
Yeah, so as we look at the food program, I think similar to how we looked at mobile order, the primary factor is ensuring we really take the time to do the training correctly, set up our teams for success, ensure that they are really ready to share this with our customers. And we found that stage process, really working through everything as we rolled this out, worked very well for mobile order. In addition, with food, there are a number of equipment things that have to go into our shop, right? So we're putting freezers into our shops. We're putting ovens into our shops. We're putting in different racks and things that make it really easy for our teams to execute on the food business. And so just the physical part of putting that into the shops will happen over time. The other piece is, as we bring food in, we are working with each of our distributors in each of our markets to ensure that we're really rolling this out in the correct way. So we are just incredibly pleased with what we're seeing. We feel really good about the training cadence that we're establishing as we roll out into markets. And then we're also ensuring that we're testing the food business across a lot of different parameters. So this move in, starting in the market in Arizona and then going into some of our newest markets with food and seeing the results that we're seeing, we're just incredibly pleased as we expand this under different circumstances to continue to see really great results.
Thank you.
David Tarantino with Baird, please go ahead.
Hi, good afternoon. I had a question about maybe clarifying what you're seeing so far in Q3. Josh, I think you guided to Q3 comps of 3.5 to 4, but you indicated that you entered the quarter with good momentum. So I just wanted to understand if you're running, in a way that's ahead of that guidance, and you're planning your marketing in a way that maybe you expect it to settle for the rest of the quarter. And then I guess a second and bigger follow-up for Christine would be, if marketing is working, which it seems like it is, generating a really good return for the business, why not lean in a bit more to keep that momentum going? So thanks.
Yeah, David. So I'll take the first part of the question there. And just to highlight Q2, we felt really good about our performance overall. Saw really strong underlying transaction trends. And then on top of that, had some just incredible promotional activities, sticker drops, merch drops, LTO offerings that really just drove outperformance. I would really describe Q2 as firing on all cylinders, really outperforming our expectations. So, as we move into July, we saw that underlying traffic trend continue. So we saw really strong health in our customer there as we move into Q3. As we think forward, I think we have a lot of great initiatives planned for marketing for the balance of the year. We would plan those at a more normalized run rate and expect those to do well, but at a more normalized level. Certainly wouldn't plan for them just to knock it out of the park like they did in Q2. So have a really good sense and feeling for the momentum coming in through Q3 and off to a great start. The performance we've seen through July is certainly factored into the guidance range that we provided for Q3.
Yeah, and for the second part of your question on marketing and leaning in more, we feel really good about how the business is performing right now. July was another great month for us. And as we look at marketing, I think that there is this very thoughtful and delicate mix of making sure that our customers love what we're doing, and it also does not become too predictable. And so if you think about all of the different ways that we are speaking to our customers or sharing new ideas with them, with merch drops, with sticker drops, with points days, we really want to make sure that it is that right balance of those things. And we feel like we're in a really good cadence right now, but want to make sure that we aren't doing so much that the business becomes predictable or that it is not as fun as it is right now.
Next question, Dennis Geiger with UBS.
Great, thanks, and congratulations. Just one follow-up on mobile order. As it relates, or two-part on mobile order, as it relates to the mix piece, Christine, is it something where maybe you lean in on marketing a bit more to highlight the mobile order dynamic to kind of increase or accelerate that adoption, or are you pretty comfortable with the adoption that you're seeing? And the second part of the mobile question really is that, that contributing to the transaction growth, encouraging to hear that. Could you unpack that a little bit? Is that a throughput benefit? Is it repeat customers coming more because of the experience? Any kind of unpacking of how it's driving the transaction growth would be great. Thank you.
Yeah, so we're very happy with the mobile order adoption rate and where we are today. And again, we are seeing in some new markets quite a bit over that 11.5%, in some markets double. And I think that if you look at what we're trying to do, one, this was the number one thing that our customers were asking for through the app. So it was really a customer-driven innovation. The other piece is we were trying to balance some of the demand across the shop, which is working quite well, and then to drive transactions. So we are seeing a frequency lift as customers come in and use mobile order. And we are also seeing that strength in the morning day part. And I think if you look at where we had untapped demand in that morning day part, it was both the lack of having mobile order and the lack of having protein-based food options that were really highlights and where some of those bigger opportunities are for us in the morning day part. And so we're seeing that very much play out with mobile order. What we're doing as we continue to look at how we drive mobile order, it needs to really be driven by our customers. This needs to be how they want to order. And so we're continuing to make the app and the order process easy. We're continuing to do surveys every week just to understand, are we meeting our customers, their time expectations? Do we have the menu items on the app that they want to have? So all of those things are working quite well, and we're getting continuous feedback. And so we're really focused on just providing an absolutely exceptional customer experience through mobile order, and are very happy with the slow and steady approach that's working well for our teams.
Next question, Sara Senatore with Bank of America. Please go ahead.
Thank you. I guess one housekeeping and then a question. The housekeeping is I just want to make sure I heard right about pricing. So like 2.5 points of price, I guess, would imply perhaps slightly negative mix. So just wanted to confirm that. And then my question is, I think Josh mentioned, how the maturation of new vintages has been contributing or fueling the transaction growth. So I wanted to understand, is there some kind of maturity curve that you're seeing now that, as you think about, growing restaurants, you get sort of a tailwind just from that maturity curve? Or was that rather a reference to, maybe perhaps some of the more recent vintages that maybe opened at lower AUVs, 22 or 23, are seeing outsized benefits from the advertising? Just because I know, Christine, you said everything's working together, but it does seem like there's a step change. Thanks.
Yeah, thanks, Sarah, for the question. On your housekeeping, you're right. There's a slight offset with mix. We've historically seen that in items per transaction, and that's continued through Q2. As you think about the newer vintages, I would broadly answer your question as yes. We're seeing performance from some of those older vintages that are not older, but the more recent vintages that we've opened in new markets, in even some of the few years ago openings as well. We're seeing strength across the board. So we've had really strong comp performance coming out of all the new vintages, both from the maturation curve and those that we opened several years ago. So feel really good about the strength, really seeing it across all cohorts. It's just even stronger in those newer cohorts.
Yeah, and I would add, we continue to focus more of our paid marketing spend into those newer markets, and that really is helping to continue to grow the brand and to build brand awareness. If you think about kind of the Dutch Rewards program and paid marketing, they're really working in concert together. So we're using that paid advertising to build the brand awareness, to bring customers into the brand for the first time. Then we want them to experience the brand and very quickly join our Dutch Rewards program, so we have that very easy channel to talk to them, share with them all the new news that's coming.
Thanks.
Next question, John Ivankoe with JP Morgan.
Hi, thank you. I wanted to revisit, the marketing question, and if you could remind me or tell me, what marketing is as a percentage of sales, 25 versus 24, for example, and how high could we take that? I mean, some companies, for example, spend 4% of system sales on marketing. I don't know if that's a magic number. So I guess address it in that context. And Christine, I asked the question because, at over $2 billion of system sales now, you might be opening some new marketing efficiency windows, that you didn't have as a smaller company, where a lot of it had to be local and a lot of it had to be digital. So do you have any bigger reach marketing efforts that perhaps, you can reach being a bigger company with just more aggregate dollars to spend? Thank you.
Yeah, thanks, John. So we haven't given the specific total kind of holistic marketing budget as a percent of sales. Our footnotes do disclose advertising, which is a smaller piece of that total. What I would say is we have continued to lean into marketing efforts, as we've talked about last year and into this year. Just given the performance we've seen from that, we do continue to lean into marketing. I'd say we're generally probably on the lower end of how others might spend as a total percent of revenue. So I think we have a lot of strength and efficiency we see from the marketing dollars that we spend today. I'll let Christine kind of talk about the second part of your question there.
Yeah, and John, what I would add to that is I do think that it is an area that we continue to look at. Given what we are seeing, we're continuing to test new ways, understanding if it would make a difference. And what I would share is I just think some of the things that we're doing with merch drops and really the earned kind of reach that we're getting from all of the other activities that we're doing, that's performing so well that we haven't seen the need to increase that marketing spend too much further right now. It is something we will continue to monitor. But again, I think that the team is just doing an incredible job of having everything work really well together. And then I would also highlight, I think that if you look at how strong the Dutch Rewards program is, having 72% of our total transactions going through that program, the success that we are seeing in getting new shops and new customers really quickly ramped up in Dutch Rewards is really allowing us to be super efficient with our marketing resources. And so I think that is something that's really unique to us with the strength of that program. And we would prefer always to just talk directly to our customers. And so very, very pleased with what we've been seeing in Dutch Rewards and what the team is doing to continue to just segment our customer base further, talk to customers in unique ways depending on their patterns. So really excited by what we're seeing there. And I think that allows us to be super efficient with our marketing spend.
Thank you.
Next question, Chris O'Cull with Stifel.
Hey, thanks. Good afternoon, and congrats on a great quarter. Christine, I guess I also had a follow-up question on marketing, and it may just be me, but I've noticed fewer email offers from the company as the quarter progressed. Just given the strength of the sales trend, have you been able to pull back on some of the marketing and offers and save them for a later time as just the benefit of the advertising of the past several quarters builds? And I was also hoping you could maybe elaborate on the awareness study, maybe the time frame and magnitude of the improvement in aided and unaided awareness.
Yeah, thanks, Chris. So specifically on Dutch Rewards, I think more of what you're seeing right now is our segmentation. And so where a year ago we were doing primarily just mass offers, everyone receiving the same thing, the team has made just incredible progress in starting to really segment the customer base, send out specific offers to specific individuals depending on their patterns. And so I think that that's actually more of what you're seeing as you look at the activity overall. And then what was your second question, Chris?
I was just hoping you could elaborate on the awareness
study. Oh, the awareness.
The time frame and magnitude of the improvement you mentioned.
Look for you. Yeah, so as look at the awareness study, that's something that we're doing right now on an annual basis so that we can really see movement and what's happening there. So we're looking at where we stand from an aided and unaided awareness. We haven't shared the exact improvements there, but we are seeing quite material improvements, especially in some of those new markets.
Great, thanks.
Thank you.
Next question, Jacob Aiken-Phillips with Melius Research. Please go ahead.
Yeah, good afternoon. So another marketing question. Could you give any more color on the personalization and segmentation with Dutch Rewards? Like, what inning are we in? What's the next phase of that personalization? And then kind of how it relates to the operational focus and the more top of funnel paid advertising you're doing?
Yeah, so on the Dutch Rewards, I would say we are still in early innings of the segmentation. In addition to segmentation, we are also looking at what is the right functionality to have in the app? What are some things we can do to make some of those rewards offers even more fun? Some of it that can make it more social, things like that. So I think that the team has a lot of plans to continue expanding in Dutch Rewards, continue making that an even more fun experience for our customers. And then as we compare like top of funnel marketing and how we think about that, really, I think it's the separation of those two channels and thinking through that the paid advertising is more to build brand awareness and brand awareness that can drive some action. So what is Dutch Bros? What are those offerings that we have? So you might have driven past the shop, seen the windmill. Now you see the advertising, you kind of connect what that shop is with what we serve, and that can drive your first visit. And we find once we get customers in for that first visit, they're oftentimes coming back. So it really is focused on driving kind of that first visit or two. And then we focus at the shop level and making sure that you're aware that we have Dutch Rewards so that we can get you into that program.
Next question, Gregory Frankfurt with Guggenheim Partners. Please go ahead.
Hey, thanks for the question. Christine, I think you guys are now entering some markets where in this kind of maybe smaller format coffee box, you're second rather than first. And I guess I'm curious, how do you approach those differently? And do you ramp the same way? I guess I'm just curious as you look at the rest of the country and kind of the need to be first or second or third in some of these markets, just how that might play out differently. Thanks.
Yeah, thanks for the question, Greg. And so, I do think every market that we enter for sure has a coffee shop in it. And so I think as you look at where we enter, there might be other sorts of new competitors, things like that. It is something that we look at closely. What we are increasingly finding is that when we come into a market, customers know who we are. It doesn't really matter what order we're entering a market in. And the lines that we are seeing in our new shop openings, the excitement for the brand really continues to build. It's something that, as I look at this brand past 1,000 shops, to see the lines actually building as we scale is just a really, really encouraging thing to see as we go. And so I feel like the brand is in such a great place. I think that our customers, our potential new customers, really understand what Dutch Bros is. They build that excitement. They're driving from long distances to come to those first shop openings in an area. As I mentioned at the start of the Q&A, to have our top performing shop last week was in Georgia, which is a new market. Absolutely amazing. So really, really cool to see the strength of the brand.
Thank you.
Next question, Brian Mullen with Piper Sandler.
Hey, thanks. Wanted to come back to the food test. You've talked about having a few important goals with this, barista satisfaction, not disrupting throughput, minimizing complexity, and then having the right assortment to make sure you satisfy the food, but get that beverage occasion. So question is, as you go through the test and evaluate through the lens of each of your goals, which one is proving to be maybe a little more seamless or easy? And then maybe on a relative basis, is anything proving to be a little more challenging or taking longer? Any thoughts on that would be great.
Yeah, thanks, Brian. We're really happy with what we're seeing across the board on all of those metrics. And we are doing both frequent surveys with our teams and with customers to understand where we are. We're also obviously seeing kind of the demand and how that's going with our customers. So we are pleased across the board. We are seeing really nice throughput. Our teams are able to execute the food within the time frame of the beverage. Our barista satisfaction is high and actually has continued to grow as we've rolled out to new markets with that really systemized training that we've gotten down to. And then the customer satisfaction is really high. I think we've got the assortment just right. And it is as we've shared, it's an assortment of just 8 items, so it makes it really simple for our teams, and I think very easy for our customers to understand and know that there's this assortment that they can order from, and it matches the beverages that they're ordering. So we're really pleased with what we're seeing from a food perspective across the board. The other piece that we just shared was we are seeing a ticket lift as well in early days, and a transaction lift. And so seeing that transaction lift really validates what we thought we would see in the morning, that our customers will sometimes share with us that they love us, but might go somewhere else because they want that food in the morning. And so now that having food in those test markets, seeing that little bit of transaction lift is something we're incredibly encouraged by.
Thank you.
Jeffrey Bernstein with Barclays, please go ahead.
Great. Thank you very much. Christine, I do hate to ask this question, but it is a compliment as you are firing on all cylinders and so early in attacking the TAM. I think you mentioned 160 units this year, 16% growth. But when I think about that growth, the new and existing markets seem to be doing well. You've got 450 or more candidates ready to lead. I think, Josh, you mentioned that the capex to build has eased pretty significantly over the past quarter or two. It seems like the opportunity to accelerate would be prime, being more on offense versus defense in such a competitive category. I'm just wondering what would keep you from ramping up, whether it's the growth this year or how you think about the pipeline for next year. Again, it just seems like all things are working for you. This would seem to be the time, unless there are some gating factors that maybe we don't fully appreciate. Thank you.
Yeah, no, thanks so much for the question. And we feel really good about where we are. We have continued to build out the real estate team. We are really excited about getting to that 2029 and 2029. And I think that the steps that we took 2 years ago to really get us into this position where we can continue to accelerate the growth were incredibly important and are playing out in such a great way. So, we wanted to focus on market planning. We're seeing those elevated AUVs in those new shops. We wanted to focus on building out, but in a more capital efficient way. We are seeing those reductions in capex as we open the new shops. We wanted to get our teams really ready to open those new shops, ensure that we had a marketing plan to quickly build brand awareness so that we could open out of the gate really strong, and we're seeing that as well. So as we look across all of those things that we went and said, hey, we would love to make a little bit of a tweak here, we're actually now seeing results across all of those areas, and I think are in just a great place to continue to accelerate our growth.
Next question, Jeff Farmer with Gordon Haskett, please go ahead.
Thank you. Consumers' increased focus on value has come up, I would say, on almost every call over this earnings season. So with that as sort of the lead in, I'm curious what your thoughts are on Dutch Brothers' sort of value positioning or offering, and how you guys are competing for those customers who are looking for value. So clearly you're doing well, but I am curious how you're competing for those customers who are looking for value right now.
So we think we're in a fantastic position from a value proposition perspective. This is something we continue to test and survey with our customers. We've been very thoughtful. We've taken very minimal price this year. I think that has put us in a fantastic position, and it's something that we would want to continue to be a leader in. I think our customers really appreciate the sizes that we have. I think they appreciate the ability to really customize freely within their beverages. And we feel like we have the formula right to really be delivering on what the customer expects. And I think you add to that when you come through our drive-through lane, you just leave in such a great place. You leave with your day being a little bit brighter. And I think that's ultimately what customers are looking for in this market.
Thank you. Appreciate it.
Thank you.
I would like to turn the floor over to Christine Barone for closing remarks.
Thanks for your questions. In May, we hosted our 19th annual Drink One for Dane Day, a company-wide initiative that raises awareness for ALS and honors our co-founder, Dane Boersma. In support of this event, the Dutch Bros Foundation donated $1 million to the Muscular Dystrophy Association. our long-standing partner in the fight against ALS. In the quarter, many of our shops also held local give-back days, each one driven by the passion and energy of our crews. The heart of Dutch Bros remains unchanged. Moments like Drink One for Dane reflect our commitment to community impact, connection, and purpose-driven growth and values that have guided us since 1992. I want to thank our teams who made Drink One for Dane Day and all of our local givebacks truly special. Your efforts allow us to keep showing up for our customers and communities in meaningful ways every single day. Thank you.
This concludes today's teleconference. You may disconnect your lines at this time, and thank you for your participation.
Wow. Wow. Hold on, let me close that up. I still got that salsa music playing in the background. What an earnings call, man. And this just continues to show the great brand that's going on. And she's right. When there was fewer stores here in Houston, and the closest store to me was 15 minutes, 20 minutes away, I was driving 15, 20 minutes to go get a Rebel, you know? And so to me, it was an opportunity to get the hell out of the house. It was an opportunity to go for a nice drive, to go pick up a nice beverage, to go see somebody that's going to have a smile on their face. So anyway, it was an interesting model, and things seem to be going in the right direction. I kind of am curious as well. I mean, if you think about it, if you continue to build at the 160 per annum of store growth, and they're going to be ending the year at about 1,100, and you're building at 160 a year. So 2026 will be 1,260. 2027 will be 1,420. 2028 will be 1,580. 2029 will be 1,740. Did I do that correctly? So we're going to finish this year at about 1,100. Next year will be 1,260. So that's 2026. 2027 will be 1,420. So they're right. I mean, they have to increase the amount of stores, right? I mean, if you get to 2029 and you're ending this year at about 1,100 stores, let's just say. You have to grow by 929 stores, and you have to do that by approximately 4 years. You have to grow 230 stores a year. And so that's a lot of money that you kind of have to fork out and try to understand where you're going to place those locations. And I have a bunch of buddies that live in the Philadelphia area that are yearning for the Dutch Bros too, man. I mean, I'm originally from the Philadelphia area and transported down here to Houston about 10 years ago. And my buddies are jealous. I've told them about Dutch Bros. I got my one buddy invested in Dutch Bros. He's made a killing off of the stock appreciation. So anyway, I think it's just a phenomenal company, phenomenal call. The thing that concerns me a little bit is the price of the drinks. So, I mean, I think that has been affected and impacted by overall, overall labor costs. So they have to increase the price to basically offset those labor costs. And I think a lot of that's driven by the West Coast, but unfortunately that impacts us here in the Midwest and South, because even though things are cheaper down here in terms of labor costs, and to the East here in terms of labor costs comparatively to the West Coast, they're able to get away with it. So I'm actually kind of curious in terms of regional contribution margin. Are they taking advantage of the opportunity to get in the South and the Eastern states where labor costs are a little bit more favorable for the employer, comparatively to, say, the West Coast, where labor costs or pay and compensation is more favorable for the employee? So hope this call finds you guys well. If you guys wouldn't mind, please, I would really appreciate something. If you guys get any value from what I provide, if any of you guys have an Amazon use Amazon Prime, you can sign up to Twitch using your Amazon Prime sub. It costs nothing to you, literally nothing. And it means the world to me. Literally just have to create an account, connect it to your Amazon Prime account. Twitch and Prime, Amazon owns Twitch. And so if you guys could just go over there, sign up. It literally means the world to me. And I'm just trying to grow that avenue to get the outreach and channel out to more people. We're on the cusp of getting monetized. So any help that you guys could provide by running over to there really quick and just providing that opportunity or just following or doing anything would truly help. Appreciate you guys as always. We'll see you tomorrow. If you guys are interested in Rocket Lab, we will be doing the second quarter 2025 Rocket Lab earnings call tomorrow. Hopefully we'll be co-streaming that with Vince is bullish and Scotto, and I believe Dave G will be doing his own solo stream. But regardless, we'll have an opportunity to look through and see what's going on with dear old Rocket Lab and the progress that's going on with Neutron. Appreciate you guys and hope to see you tomorrow. And would appreciate you checking out the Twitch and signing up with your Prime sub if possible. Thank you guys so much, and we'll talk to you guys soon. Cheers.